So students, now we'll start with this session. Hope that now audio is all fine. Students, now so students, let's now start with this particular session in this context. All the audio video fine now, students? Perfect. Now, students, what I was just putting up a proposition quickly was is that like the AO, if he has to start the proceedings under section 147, then there has to be what? An information. That information we have seen, students, primarily that information should suggest that information, students, should suggest that the income has chargeable to tax has escaped the assessment. So that is what that information is all about. Now accordingly, the information means what? The information which has been flagged by the IT department, the risk management strategy formulated by the IT department, or through the audit objection, or through the information which is received under section 90, or information which is in consequence of any court judgment. So that could be considered as an information. However, in the two particular cases, there would be a deemed information which is there with the AO for a period of 3 years, meaning thereby it in fact gives the jurisdiction primarily to conduct the reassessment under 147 for a 3 years period, and those cases are the cases of search and the cases of survey. And that 3 years primarily which should be there, the year in which the survey is conducted or the search is conducted, from that the last 3 years is what the deemed information is suggested to have existed with the AO. That is what they try to suggest in this context. Now one point which we were dealing with it was towards the end was that if supposedly the search is conducted, then there is a deemed information for the 3 years period, but for that whether the AO will he be required to send the SSC an opportunity by giving him a notice under 148A? To that the answer is no. Directly he will give the notice and he can start with 147. But if it is 133A, so although there is a deemed information for 3 years, but before he will start with 147, he will have to give the notice to the SSC, an opportunity of being heard to the SSC by sending him a notice under 148A. And that is what we have discussed in this particular context. So students, now once this has been done with this, in this context, as you can see herein, that the notice under 148 shall be sent. The notice under 148 shall be sent. The question therefore is, what is the time limit to send the notice? And the time limit, students, you can see is under section 149. The time limit that, students, you can see is under 149, and therefore the time limit, students, what they have given to you under section 149 in this particular case, the time limit to send the notice would be 3 years from the end of the relevant AY. Probably that is the case. Or it can also go, students. पूजा के सामने पूजा सामने जो फोन मेरा नहीं लैंडलाइन मैं से बोल रहा हूँ मम्मा लेकिन कार चला रही है मम्मा उठाएगी नहीं फोन कार चला रही है उसको डिस्टर्ब मत करो कार चला रही तो भी आ जाए and the second one students as you can see over here is the notice can be given beyond 3 years for AY beyond 3 years herein but not beyond 10 years. Now this beyond 3 years up to 10 years students is the case where students beyond 3 years but up to 10 years is a case where students is a case where in this context the AO primary in this context has the evidence which reveals to him that which reveals that income represented income which is represented out of what? Represented out of three things. Income which is represented out of what students? Indeed, AO is having evidence which reveals that the income which is primarily represented through the asset. Second is the expenditure in relation to an event or the occasion, or the third one students, an entry in the books. Now this asset students that you can talk about it could be anything. Herein could be immovable property, shares or security, loans and advances, and the last one students is the entries in the books. So students, these are the cases students which are being given to us in this regard, and therefore that exactly is the point. So this is a very comprehensive diagrammatical representation of the entire 147. Each and every aspect gets captured through this particular part. So therefore, this is what it would be in this context. I hope that all of you are clear with this one, every one of you. So this is exactly what the entire point is. students, in this context. All of you have copied on this? So therefore, now in this context, we are done with this particular part, and now on this side, students, we can now proceed with our question which is there before us. Any query, students, over here up till now? Can we then proceed now, students, in this case? All the entire particular part is through. Now we will proceed, students, in this regard with the section itself. In the section itself, let's start, students, now with the case study. So with the case study, students, which is there for us to be considered herein, what they are suggesting, that herein what they are suggesting, students, in this case, please read this case study, students, once, all of you, and please get your answer. Quickly get your answer, students. Question number 18. So, students, your answer on this particular point. You can he issue the notice, students, in this particular context? So now if you see over here, the search was conducted under 17/4/2022. So 22-23 previous year is 22-23, students. Is the search when it was conducted? Is the notice under 148A required to be given? Answer is no. Consequent to search, the AO in his possession of documents revealing the information pertaining to the shares purchased in previous year 1617, 23 lakhs. And what are the three? Let's take the first 3 years, which is for which they have got deemed information. So the 3 years, students, could be here in, if I just go 3 years behind from the previous year point of view, if I have to just go previous year point of view. So previous year is 21-22. Previous year is 2021. 1920. So that is the previous year, students, which has been there. Previous year is this previous year. Whereas the previous year that is sought to be challenged is previous year 1617 and previous year 1718. So obviously we will require, students, the 10 years period. The 10 years period. Now whether that 50 lakhs threshold which we were discussing over here, this 50 lakhs. Okay. Here this should be, students, how much? Okay, that primarily, this last point we have not written. Last point, students, we have not written. This amount should be how much? By the way, students, in this context. Is there any amount threshold or not in this context? If he has to go for this particular period, is there any amount threshold or not, students? Indeed, there is this amount threshold. There is this amount threshold, students, in this particular context. And what is the amount threshold, students, in this regard? 50 lakhs. 50 lakhs, students. So the amount threshold which has been there is 50 lakhs. So only then you can stretch from 3 years to the 10 years period. Only then, students, you can stretch through to the 3 years to the 10 years period. So that is what, students, in this context. So 50 lakhs or more. Huh? 50 lakhs or more. 50 lakhs or more. Now, is 50 lakhs pertaining to only 1 year? Is 50 lakhs, students, pertains to only 1 year? That is another question to be answered. 50 lakhs, is it to be pertain for 1 year in this particular context? And the answer is no. Aggregate. It has to be, students, aggregate. So aggregate of all the year in this particular context. Aggregate for all the year, students, in this particular context has to be 50 lakhs. Aggregate in that particular context, students, has to be 50 lakhs. And therefore, in this particular case, you can say over here, indeed. So therefore, notice in this case cannot be issued. So therefore, no notice cannot be issued because aggregate is only 48 lakhs. So only 48 lakhs, students. So therefore, the answer is no. In this case, answer is no, students, in this particular case. So this is what it would be in this regard. This is what, students, it would be in this regard. So he cannot issue it. Will your answer will change if for previous year 16, 17, 30 lakhs instead of 23 lakhs, whether answer will change? So 30 plus 25, 55. So answer is changed. Yes. Notice can be issued. Would your answer, a consequent of such, the assessing officer has in the possession documents revealing information pertaining to expenditure 52 lakhs incurred for the marriage of his daughter instead of the information pertaining to the shares? Yes, why not? 52 lakhs, so since the amount exceeds 50 lakhs, greater than or equal to 50 lakhs, therefore, yes, notice can be issued. Notice can be issued. Now, students, how you have to write the answer in this case? First of all, students, you should write the provision properly. So, approach to write the answer in this case, students, would be yes, Akib, that's true. Approach to the amendment, students, would be that approach to the amendment, students, that we are talking about it. Approach to your answer would be whenever this are related to the same issue, first you write the provision properly. My suggestion is that instead of writing big provision, write the provision in points. That the AO has deemed information primarily since the proceedings has been issued under search. Then point number 2, he can therefore issue the notice under 148 without what? Without issuing the notice of 148A. That is point number 2. Simple sentence. He can issue the notice under 148 without requiring the notice under 148A. Then point number 3, the time limit to issue the notice is as under. You can make the chart the way I've made it, up to 3 years from the end of the relevant AY family, or beyond 3 years, but up to 10 years from the end of the relevant AY. Which AY? The AY for which the income is sought to be assessed. The AY for which the income is sought to be assessed, the notice can be given. But for this extended period, you can write like this. But however, for this extended period, the income that is sought to be assessed should be how much? Should be at least 50 lakhs. Should be at least 50 lakhs. Now, this income could be represented out of the asset. You can just write the way we have done it, through the asset. This income can be represented through the asset, which can be in the form of immovable property, or the shares of security, loans and advances, or the entries in books of accounts, or it could be expenditure in relation to events or occasion, or the entry in the books of accounts. So please make this chart. In this case, the income can be represented out of asset, expenditure in relation to the event or occasion, or entry in books of accounts. Asset, make this bifurcation the way I've done it. This is also possible, because what happens is that when you make this particular provision in writing, you may not be properly in a position to write the answers correctly. And that is the reason why this is the best approach for you to consider in this case. I hope that all of you are clear with this one, the approach for you to get into it, into the action. Now with that, students, we will proceed to our next particular question. Whether we have to take 1 lakh, 50 lakhs in earlier years. No, you just focus, okay, with the latest amendment only would be given. So you will not be asked the old provision. Don't worry, the old provision will not be asked. Question number 19. Messrs. Alpha and Company is a partnership firm with 5 partners sharing. Please read this question very carefully. Question number 19. So students, over here what happens? This takes us through to the next particular proposition over here, students. This will take us to our next very important particular proposition. And what exactly it is? That other important particular proposition, students? Let's have a look over here in this context. So the next important proposition, students, which has been there over here, is about the penalty particular part. Here is a rate which you all are aware, the draconian rate. The draconian rate of 78%. Now students, this 78% of the draconian rate that we are talking about it is in respect of one very important particular discussion that we are now going to have at students over here. And what exactly it is in this context. So students, all of you will just pay attention to this particular proposition that we are now going to discuss in this regard. So over here, students, if you all are aware, in this particular context, which is about the fact that this is in respect of the penalties which has been there, 68 to section 69D, which is in this regard, 68 to 69D, which is there, is the provision where the tax is getting charged at the rate of 78%. The tax is getting charged at the rate of 78%, and that is under 115 BBE. What exactly is that particular provision, students? Here in student section 68 to 69D. First, let me do the provision and then I'll let you the analysis of the same. These are the cases where it is a clear cut case which the department is trying to establish the case of a black money. This 60 to 69D are those cases where the department is already knows that the associate is having a black money. And on this black money, represented in various forms, which is covered in 60 to 69D, this black money represented in various form, which is covered in 60 to 69D, that the provision of section 115BB is applicable. Now, what happens, students, over here in this case, the tax on this income family is governed by 115BB, and that is at the rate of 78%. The derivation of 78% is 60% is the tax base rate of tax plus 25% is a flat surcharge plus the HEC, students, the flat surcharge of 25%, and then the HEC of 4%, so as to create a case of effective rate of 78%. Now, in this particular context, students, what we will say would be, in this situation, students, there are two ways. Now, whether the AO has detected such income, this in which income, 60 to 69D income, during the course of search, the answer can be yes or no. During the course of search, the answer can be yes or no. If the answer is yes, then the penalty, students, on this will go under section 271 AB, and the range of this penalty is 30% or 60% of the undisclosed income. 30% or the 60% of the undisclosed income. If the answer is no, then in that particular case, the penalty would be under section 271 AAC, and the penalty under 271 AAC would be the 10% of the tax, under section 115BB. And what is this 10% of the tax? The 10% of 78%. The 10% of 78%. The 10% of 78%. I hope that all of you are clear with this one. Every one of you. The 10% of 78%, students, is what will be considered in this regard. Fine. Now, what exactly is this 60 to 69D, students? Let's now look upon to this particular proposition, 60 to 69D. This is one of the important provision could be targeted in your examination, students, and this very question could be there in your examination, students. This very question could be there in your examination, so be prepared for that. This very question could be there, students, in the examination, so be prepared for that. Now over here, students, what happens is that the first one, actually mainly they are going to target 68 is the most important particular section. 68 talks about the case of a cash credit. The cash credit doesn't mean that you are receiving the cash. It could be money. It implies this money. So it implies the credit through a money, an entry through a money. So what exactly happens, students, in the books of accounts? In the books of accounts, students, if there is any entry of the receipt of money, primarily, example, I'm just giving it to you. Like in the case of partnership firm, the partners capital account, the balance sheet shows partners capital and cash in bank. In the case of a company, say for example, students, there is a share capital and then there is a cash in bank. Or another particular case could be like a loan in the balance sheet, students, like a loan has been given and then there is a cash in bank. And then there is a cash in bank. So whenever there is a situation that arises over here like this, that these are the various particular observation which are being there, then obviously the assessing officer, by exercising the provision of 68, can ask three questions, students, over here. And the three questions are: question number one, what is the identity of the person who has given this particular amount? That is point number one. Point number two, what is the capacity of that particular person who has given this amount? That is the second question. And the third question, students, is what is the genuineness, of the transaction, why this transaction was undertaken. So these are the three questions: identity, capacity, and the genuineness. So these are the three questions that will be put up before the SSC, and therefore the onus now would lie on the SSC to establish the three parameters which has been asked in this question, in the question under section 68. Identity, who has given the amount, the capacity of the person to give such amount, and the genuineness of why this amount was required at first place. Obviously, when it comes to raising the amount through the share capital, then the genuineness is established, that because I wanted to raise the share capital, that is the reason why this money was raised. But the other two questions needs to be established. One is, who is that person who has contributed, and what is the capacity of the person, whether is he a person of means to really give that much of money. Is he a person of means to really give that much of money? This is what it is. Now, there is a very important provision, students, which has been there in this particular context. In this particular context, students. And the Amendment of Finance Act 2022, primarily. So, therefore, what I told you, students, hear it. In this case, the three things: the SSC shall establish what? The three things. One is identity of the person contributing the amount. The second one is the capacity of the person contributing the amount. And the third one, students, is the genuineness of the transaction. The genuineness of the transaction. Now, students, the amendment of the Finance Act 2022. The amendment of the Finance Act 2022, students, be careful. And what is that amendment of the Finance Act? So this is what is the amendment of the Finance Act 2022. That in this case, that the source of the person contributing the amount also needs to be established. This need to be established by the SSC. Very important particular point. And therefore, this is the additional burden of proof. Additional burden of proof to be discharged. To be discharged by the SSC. By the SSC. Additional burden of proof to be discharged by the SSC. This is a point, students, which has been there in this regard. This is a point, students, which is there in this regard. I hope that all of you are clear with this one. Every one of you. Now, I should say to all of you that before the amendment that has happened, students, of the Finance Act 2022, this additional burden of proof was there only in one particular case. Before the amendment of the Finance Act 2022, this particular burden was there only in the case of students, was there only in the case of one situation. And what was the situation? Only in one situation this burden was there. Are you aware of that, students? What is the situation in which this burden was there? It was only in the case of a private limited company which is raising the share capital. The private limited company raising the share capital, only in respect of that this burden was there. Meaning thereby, only in that particular case that the department that the SSC had to establish what? That what is the source of the fund, students, in this regard? What is the source of the fund, students, in this regard? So that was there only in one particular case. Now, what is this capacity, students? When we talk about capacity, is he a person of mean? Does he have that much of money? Because earlier, even the potato vendors were becoming the shareholder of many companies. Even the potato vendors were becoming the shareholders of various companies. And how these potato vendors were becoming the shareholders? Because the person who has got the black money, what he used to do, he used to get these people, hundreds of people, and in every person's bank account, 2.5 lakhs were getting deposited, because that up to 2.5 lakhs, there is no tax which was there. So he used the black money, the person who got the black money, he used to deposit in every person's account 2.5 lakhs and used to tell them, now become the shareholder of this company by putting this money in the company. And once these people used to become the shareholder, there used to be a transfer agreement, and then he used to do a transfer agreement of their shares, and these shares were being purchased at rupees 1 per share, that these particular shares were being purchased. So that used to be the modus operandi, that people who didn't had the capacity to invest this particular fund, even they were the one who were becoming the shareholders. And that exactly the point. And therefore you had thousands of dummy companies where the companies were formed only for this particular reasons. Thousands of it. And this has started from 1995 because of one judgment of the Supreme Court in Lovely Exports Limited. And that judgment of the Supreme Court in Lovely Exports Limited created that window for this thousands of dummy company getting established, so that the people who had the black money, they could easily could get what, because no question would be asked, because obviously once the thing is this, that the shareholder primarily is, say, the potato vendors, fine, I used to just have to give the name of who are the person who are the shareholders. That is it. That is the only particular burden I used to have to discharge as per the judgment of the Supreme Court. Beyond that, my burden is not there to establish anything, and the AO has to accept it. If the AO want to do the inquiry, he can do the inquiry with all the potato vendors. But potato vendors also only have contributed 2.5 lakhs. And you can just imagine, they were also smart to just deposit the money up to 2.5 lakhs, nothing beyond that, so that they also don't fall in the tax net. And this used to be a huge mess which got created. In fact, in 2014, that the first amendment took place, and the amendment required now. First amendment was that if there is a company which is there, and that company through its shareholders is which company? The private company. If the private company has raised the share capital, then the private company will have to establish who is the person primarily, who is the person who has contributed this amount. And not only that, the source of source, that is the shareholder, what is the source of their particular mode of investment, why, what is the source of their particular mode of investment, even that has to be established, but only for the company. And what the Finance Act 2020 did, now is it only to be considered in the case of a private company? Answer is no. As per Finance Act 2022, now this particular source of source, first you need to establish who is the source, and what is the source of source, what is the source of the source who has contributed this amount, you need to also establish that. And only then this burden is set to be discharged, and the provision of section 68 will not be invoked. But if the SSC fails to establish, so therefore this is nothing but to establish what, the source of the source. This is the additional burden. Yes, Ritvik, that is how it will be considered. So this is the amendment now, and accordingly now this is applicable to all the cases, not only confined in the case of a private company. It is now to be considered for all the cases. With that particular proposition, students, now then, in this backdrop, now this is section 68. The remaining particular part is like unexplained. This is a cash credit. The other cases are like unexplained expenditure, like the expenditure has incurred, say, for marriage function, or say any other expenditure is incurred, say anniversary celebration. So in this case, tell me from where you got the money to do this much of the expenditure for the marriage celebration, or for anniversary celebration, or say for example birthday celebration. From where you got this money? This is a thing that needs to be established. If the SSC could not say primarily the nature and the source from where the money was received to do this much of the expenditure, say towards marriage, say towards the anniversary, birthday, etc., in that particular case, these expenditure will be considered as an unexplained expenditure, and accordingly would be considered as your deemed income under the respective section. Same is also the investment that you may have done, say in bullion, in jewelry, and again the department will ask you from where you got the money to acquire these investments or the bullion, etc. Please understand, this is such a big trap which is there. It's a huge trap. Students, as you may be aware, one particular point I just want to share with all of you. Whenever the search happens, students, whenever it happens, the presumption is always there. There is a presumption which has been made. What is the presumption which is made? The presumption that is made, students, is this, that the asset found in the possession of the SSC, or in the premises of the SSE is deemed to be of the SSE. Is deemed to be of the SSE. Now, obviously, if it is deemed to be the SSE, the SSE needs to explain the nature and the source. SSE now needs to explain, students, what the nature and the source. And as I told you, if he fails to explain the nature and the source, if he fails to explain the nature and the source in this particular context, say for example, if he fails to explain the nature and the source, then what happens? Fails to explain the nature and the source, students, then in that particular case it will translate into what? Unexplained investments, unexplained investment, which will be considered as income under section 69B. It will become an unexplained investment under 69B, and because it is an unexplained investment under 69B, accordingly section 115 BBE will come into play. At 78% will be the tax. And since it is detected through a search, the penalty that will be charged under section 271 AB, the penalty that will be charged under 271 AB would be 30% or 60% or 60% of 30% or 60% of the undisclosed income. This is the entire flow process. I hope that you are now getting the clarity through this particular entire flow process, students. All of you. And that exactly is the point, students. I hope that every one of you are now clear with this particular aspect of how the flow process goes. Isn't it? And that's the interlinking, students. That's the interlinking. With that now, students, let's start taking across the question now. So this is one of the better way primarily to revise plus do the Super 60. Please take a note of this particular part. With that now, I hope that you all are now copying this as well, students. So students, coming to this one, question number 19 again. Mrs. Alpha and Company is a partnership firm with 5 partners sharing profit and loss equally. Its return for the AY 23-24 was selected for scrutiny under 143.3. The controversy was in relation to loan of 50 lakhs from one partner, Mr. Raghav, credited in the books of the firm. The firm explanation that Mr. Raghav gives a loan of ₹4 50 lakhs carrying interest at 12% as approved by partnership deed was not accepted since Mr. Raghav's explanation of the source in his hand was not found satisfactory by the AO. Students, in this context. So accordingly, students, what happens over here? According the AO treated the said amount as cash credit in the hands of firm, Mrs. Alpha and Company, and subjected what, students? And subjected the same to the tax of students. Herein, to the tax of 78%. Discuss the correctness of the action of the AO. Yes, the source of source is not getting explained. So here we can say, students, the source of the source. This is the amendment question, students. The source of the source not fully explained to the satisfaction of the AO. To the satisfaction of the AO. And hence what? And hence, students, the action of the AO is correct. An action of the AO is correct. Is that point clear to all of you, students? Is that point clear to all of you, students? And that exactly is the point. Now, students, if you allow me, although this is not the question, but I'll tell you a double impact that is going to happen. Are you ready for the double impact that is going to happen in this particular question? I'll explain you, students. What is a double impact that is going to take place in this particular case? Be ready for this one, students. What is the double impact that is going to take place in this particular situation, students? Be ready for this particular part of the double impact. Be careful. Here, students, as you can see, for the form it is fine. You know what is going to happen now? Are you aware of it, students? Tell me, for the form has received what, students? There is a loan from the partner, loan which has been given, loan from partner, and there is a cash in bank. Hold on, Nitesh. So therefore, section 68 is getting applicable. Section 68 is getting applicable. Now, what about the balance sheet of the partner? Can you visualize the balance sheet of the partner? The balance sheet of the partner, students, in this particular context, would be what? The herein asset side loans and advances. For him, it is the asset side loans and advances to the firm. For him, it is an asset side loans and advances. Na? For the firm, it is a liability. So therefore, he has created a debtor. He has created for that. And because he has created a debtor, students, again, primarily in this particular context, it may so happen, I'm not telling you 100%, but it may so happen what it would be. It would be a case of, in this context, it would be a case of, students, in this particular context, that you have given, or maybe you have given a loan which is an investment for you because you are getting a return of 12%. 69B can be invoked on him. This is for him the asset side. 69B can be invoked for him. Although this has nothing to do with the present question, the present question is not targeting this particular part. So 69B can also be targeted on this particular partner. This is a double whammy. For the firm, definitely firm is going to suffer. For sure, 68 is going to be there on the firms. But for the partner, students, in this case, 69B would be there in this regard. For the partner, students, 69B would be there in this regard. And that exactly is the point in this context. I hope that all of you are now clear with this one. In that situation, students. Now, this question 20, students, I think this is a very simple question. Let's read it out and finish it off and let's move further. So here, question number 20, students, if you all can see, on 31st of March 2023, A Limited has an outstanding liability, has an outstanding interest in the liability, students, of how much? Of 3.5 crores in this case, of 3.5 crores towards the loan payable to IFCI, a public financial institution. So that is the amount of the loan which has been there with the IFSCI, students. What is the next particular point, students? So the next particular point in this particular case is herein. On the same date, it issued the debenture or to IFCI Limited in lieu of outstanding interest and deducted the said interest while computing the profit and gains of business of AY 23-24 of 23-24 students. I think now you all are aware of this particular part. So this was a question which was targeted in the last attempt also. However, the AO however rejected the deduction of interest on loan claimed by A Limited. Discuss the validity of the action of the AO. Discuss the validity of the action of the AO students. So therefore, students, in this particular context, is the disallowance, students, is the disallowance, is it applicable? And the answer is yes. This is not a case of a repayment. Students, you have not made a repayment of the interest liability by issuing your debenture against the settlement of the outstanding interest liability. This is not going to be considered as the repayment of the outstanding interest liability, and hence in this particular case we will say that issuance of debenture against the outstanding interest liability is not equal to repayment of the interest amount, and hence the deduction under 43B will not be available on such issue. But yes, tomorrow when the debenture amount is redeemed, if the debenture is redeemed tomorrow, then at that particular point of time you can definitely claim the deduction on the basis of constructive payment, on the basis of the payment towards the outstanding interest amount, payment towards the outstanding interest amount. Let's look upon to this now MCQ question, students, in this regard. Let's look upon to the MCQ question, students, in this regard. And the MCQ question, students, in this regard is the MCQ question, students, in this regard is what? Is this, students, in this particular case? Please have a look, students, in this scenario. Please have a look, students, in this particular scenario. Question 21. A survey is conducted under section 133A in the premises of Mr. Arav, and a search is conducted under section 132 in the premises of his friend Mr. Arjun on 1st of May 2021. The AO issued notices under 148 for AY, 3 AY students, 3 AYs. To whom? To Mr. Arav and Mr. Arjun. To Mr. Arav and to Mr. Arjun, to deemed information, students, the deemed information clause. However, such notices were not accompanied by the copy of what? In this context, 148. 148. Is the action of the AO is in the issuing such notice under 148 to Mr. Arav and Mr. Arjun valid? Please say. Already discussed, students, this question. Akib. So, deemed information for 3 years. Deemed information, students, for 3 years is applicable for both survey as well as search. That is fine. But what about the notice 148A? Is that has to be passed? Answer is yes. In which case? For the survey case. And survey has happened on whom? On Mr. Arav. Survey has happened on Arav Hitesh Naina. Survey has happened on Mr. Arav. So is the notice required, students, for under 148A on Mr. Arav before assessment of 147 is started? Answer is yes. So therefore is the notice of 148 to start the proceedings under 147 on Mr. Arav without giving the notice of 148A, is that valid? No. So it is not valid in the case of Arav. But what about Arjun, in whose case the search was conducted? Arjun, in whose case search was conducted? In the case of Arjun, it is valid. So point number C, students, is the answer. So notice of 148 without giving the notice of 148A is valid for whom? For Arjun, but definitely not valid for Arav. I hope that all of you are clear with this one. So again, this is an important MCQ question which has been there. And now with that, students, be careful. Let's have a look to this particular part. Read this information, students. Question, case study. Question 22. Students, now students, in this particular context, there are two sections that you always have to take into account which are considered, and those two sections are 133A and 133B. There are two sections which are primarily 133A talks about the survey. This is a survey provision. In the survey provision, students, the point is this, that first and foremost you need to take an approval before you conduct the survey. That is the first and the foremost point. You need to take an approval before you conduct the survey. That is the first and the foremost point. The second particular point, students, in this regard, in this case, students, is the fact that herein, the first case for survey, you need to take an approval under 133A of the higher authority, which is commissioner and all. Then thereafter, there is a place where you can undertake the survey. So that is the second particular point, the place where you can undertake the survey. The third point, students, is the timing when you can do the survey. So like for example, if it is the place of business where the survey is supposed to be taken, then it has to be during the business hours. If it is any other place other than the place of business, then in that case it is after sunrise, before sunset. I'm talking about 133A, by the way. And if it is the survey which is for, or which is to be done for the marriage or any ceremony or any such event, then the survey can be conducted only after this event or ceremony is over. This is for 133A. 133A also provides that the income tax authority who has conducted the survey, they can impound the books of accounts. Impound means seize the books of accounts, and the books of accounts can be seized for a period of 15 days. If the income tax authority wants to retain the books for more than 15 days, then the prior permission of the commissioner needs to be obtained. The prior permission from the commissioner needs to be obtained. That is what 133A says. So far as 133B is concerned, it is the assessing officer who without any permission can can go to the place of business which is under his jurisdiction during the business hours and he can extract the information, by going to the place of business which is under his jurisdiction during the business hours, and he can extract the information. Only extract. Can he impound the books if he is exercising the power under 133B? Answer is no. The books cannot be impounded in this particular case. So that is one thing which is there so far as 133B is concerned. Okay, so between the two, how to identify in this entire case study, they have not mentioned whether the power is under 133A or whether the power is under 133B. In this entire case study, they have not told you whether the power is exercised under 133A or it is exercised in 133B. So if they have not given you the section, how do you identify? You need to identify, students, then in that particular case through this particular word, and the word is the survey. The word, students, in this case is a survey. So survey is the particular word that you need to pick it up, and therefore you will say that because the word is survey that has been used, therefore the power is exercised under section 133A. 133A, because in 133B nowhere the word survey has been mentioned. So the AO in 133B, without any requirement of taking the prior approval, he can directly go to the place of business which is under his jurisdiction during the business hours, and he can extract the information, period. And therefore this entire case study has to be seen in light of what, students? In light of 133A and not 133B. So therefore, students, in this particular context, on the basis of what you all have read, let's do the MCQ question there. So based on the facts of the above case scenario, choose the most appropriate answer to question number 1 to question number 5 below. Most appropriate answer in this particular case. Is the action of the AO entering the entering Trupti restaurant at 11:30 p.m. valid because the owner is objecting that you cannot enter this after sunrise, before sunset. So it is already sunset that has taken place, and therefore you cannot enter now. This is the contention. But the counter would be, what is the counter? The counter would be, did he enter during the place of business? Did he, students, entered during what, students? Indeed. So therefore, can he enter it? Answer is yes, because he has entered during the business hour, students, or not. Did he entered during the business hours or not? He has entered during the business hours. But be careful. Do you require the approval? If you want to do the survey, under 133A. So although that counter is available, that I can enter during the business hour because this is a place of business. But I told you originally in 133A, not in 133B, but in 133A, which is a survey, do you require a prior approval? Do you require a prior approval, students, to conduct the survey? Please tell me in this particular case. And the answer is yes. In 133B, the AO will not be requiring any prior approval. So he can go to the place of business in his jurisdiction during the business hours even without the prior approval. That is 133B. But 133A of the survey, does it require a prior approval? And the answer is yes. So although the contention on the part that after sunrise before sunset is not valid because he can enter during the business hours, so that is a counter. But the fact that no prior approval was being taken, therefore on that particular ground, this particular power exercised is invalid. This particular power which is exercised is invalid. I hope that all of you are clear with this one. And that exactly is the point, students. So with that now, students, let's look upon to the next question. Question number 2. Would your answer in question number 1 change if the AO had surveyed Trupti restaurant only for the purpose of verifying whether tax has been deducted or collected at source? In this case, in accordance with the provision of the Income Tax Act 1961. Now, students, in this particular case, TDS, this is the new provision. I should tell you one important point on the TDS part. All of you will pay attention. This is a new addition on the TDS part. New addition, only to check the TDS particular part. Students, the TDS requirement or the compliances, be careful, is a new edition, not a new edition of Finance Act 2022, but I think it is a Finance Act 2018 or 2018 or 2019. That is a Finance Act which is was wherein now the survey can be undertaken primarily to verify what, whether the TDS compliance has been conducted or not. Now, as far as the TDS is concerned, students, there is no requirement that it could be a place of business. It could be any place, family, for which you can undertake. You can go there to see whether that particular place, whether the compliances are being undertaken for the TDS. So not necessarily that it is a place of business, because when you go to the place of business, you actually are wanting to know the business transactions. Whenever you are surveying the business place, in that case, you want to know the business transaction, and during the course of the business transaction, probably how the things are being kept, what are the entries which are being made in those transactions. So place of business has got a different rule, like in the case of restaurant. In the case of restaurants, so that way he can go there and do the survey when he is doing for a place of business. But here for TDS compliance, you need not go to a place of business. It could be any other place. So yes, he could, in fact, for TDS particular compliance, to see whether they have been conducted or not. What will be the scenario? So the scenario in this case would be, students, in this particular case would be what? Since he has obtained the permission of the chief commissioners in this scenario, since he has not obtained the permission of the chief commissioner in this particular scenario, in this context, accordingly what, students? Sorry, hold on. That is there. It is, you can say, it is another place, student. This is another place. So there are two grounds, because TDS compliance to verify, he can go to any place, need not necessarily be place of business. So therefore, if he is surveying for place of business, he wants to also verify the business transaction. So that is the reason why he goes to the place of business for which during the business hours, and that is the reason why during the business hours. But for the TDS compliance, students, can you hold the accountant? Students, can you hold the accountant in this case at 11:30 p.m. at midnight to say that I have came during the business hours. So, Mr. Accountant, where are you? In the hotel premises, primarily, wherein you can, during the business hours, you can do a survey. But then, can you expect the accountant that because I came here, I want the accountant also to be here? Does the accountant needs to be there over here? And the answer is no. For that accountant to be there, in that case, you need to be there at what time, students? After sunrise, before sunset. After sunrise, before sunset. And that is precisely what you can tell the accountant to show to him whether the TDS compliance has been made or not. To show to him whether the TDS compliance, students, has been made or not. And that exactly is the point, students. So therefore, Ramkumar, this is what it would be. And hence the answer is that for the TDS compliance matter, he can enter the place after sunset, family, since he has to enter after sunrise but before sunset, and therefore we can say that this particular survey for the checking of TDS compliance is invalid, because in this question he is entering there at 11:30 p.m. at midnight, which is after sunset, and because he is entering at 11:30 p.m. midnight after sunset, family, therefore we can say it is invalid. And also the fact that no permission has been taken from the commissioner in this context. No permission has been taken from the commissioner in this context. Coming to point number 3. Is the action of the AO, truth, is the action of the AO entering Ruchika restaurant and hotels at 9:15 p.m. valid in this case? In this context. Ruchika restaurant, students, obviously Ruchika restaurant, so he has entered during the business hours. Did he enter during the business hours? Yes. Okay. But the second question is, but did he took the prior approval from the commissioner? Did he took the prior approval from the commissioner, students? And the answer, students, in this particular case is no. And therefore, students, in this case, it is invalid. So in this case, it's a business hours. So answer would be C. So although he has entered during the business hours, but the fact that he has not taken up the prior approval, therefore it is invalid. Therefore, students, how smart is this question? You would all appreciate in this particular part, students. How smart is this particular question? This question, in fact, if you all can see very carefully, this question, students, in fact, is trying to target on a larger issue. And what is that larger issue? That if supposingly the question is not specifying any sections at first place. The question is not specifying what? Any sections at first place. And because the question is not specifying any sections at first place, be it section 133A or be it section 133B, no sections has been specified in this context. No section, students, has been specified in this particular context, and therefore no section has been specified, students, in this particular context. And therefore what? Therefore, this is the proposition. And therefore, students, this is the proposition. I hope that every one of you are clear with this one. Every one of you are clear with this proposition. That you should know whether in the question whether the word survey has been mentioned, and the answer is yes. Otherwise, if you answer this question based on 133B, your entire aspect will go wrong. So don't answer, students, on the basis of 133B. You have to answer it on the basis of 133A. Now coming to fourth question, is the action of the AO in impounding and retaining in his custody books of accounts and other documents, students, and other document in this scenario of Trupti hotels and restaurant after recording reason for doing so without taking the prior approval is valid? For how many days, students, the books has been impounded? For how many days, students, the books has been impounded? Can you see this one? And retained in his custody for a period of 18 days. For a period of 18 days. In both the above cases. In both the above cases, he has impounded it for a period of 18 days. So the fact that he has impounded it for a period of 18 days, students, can we therefore conclude that this action therefore translate into an invalid proposition? So therefore, in this case, it is invalid because what? Because the approval has not been taken. Because beyond 15 days, you need to take the approval. So this is what it is. And in this case, would your answer to question number 4 change if the AO had surveyed Trupti restaurant and hotels only for the purpose of verifying whether the tax has been deducted or collected at source? In this case, in accordance with the provision of Income Tax Act 1961. So obviously, students, in this case, in this particular case, students, if he is surveying, students, one important point, if he is surveying for the TDS or TCS compliance, there is no books that can be impounded. One point, students, you just take a note of it, because the TDS part we have not elaborated earlier also. Just take a note of this particular part. On the survey, students, just take a note of this one. On the survey particular part, this is an important thing. On the survey, which is under section 133A, family, the survey is for the place of business, in this case, or to check or to check the TDS TCS compliance. So the time in this case is during business hours, and the time for this one, students, is after sunrise and before sunset. Books impounded up to 15 days and thereafter approval. Thereafter approval. Here, students, the books cannot be impounded, because you just are going there to check what? Check the TDS and TCS compliances. Cannot be impounded, students, because here you are, in this case. Yes, a verification can be done. Only you can verify, you cannot impound. So students, here the books cannot be impounded when you are doing a TDS and TCS compliance. And therefore, in this context, so obviously the books cannot be impounded, students. D, C is the answer. D says beyond 10 days, 10 days, then if you are doing only TDS and TCS, books cannot be impounded. Now with that, students, we go to question number 23. In this context, let's look upon to question number 23, students. Quickly, all of you read the question number 23 now. This is a Hemant Kumar Sindhi's case law, students. Hemant Kumar Sindhi's case, Allahabad High Court. Can you utilize the seized asset in adjustment of the estimated liability through an application? Through an application, students, primary. So voluntarily he has disclosed the income through an application, and therefore he wants that the department should adjust the tax liability, family tax liability, from the tax liability which he has voluntarily disclosed and against the seized asset. Against the seized asset. Can that be done? So already this Allahabad High Court decision is the most important one, and it is very clear that the liability only when it is finally determined. The liability only when it is finally determined by the AO. The liability, students, once it is finally determined by the AO, students, in this particular context, that in this particular regard, students, we can say, students, in this scenario, that what? That the asset seized can be adjusted against the liability which is finally determined. Here in this case, students, what we have to say? We have to say that the liability is yet to be determined, because it will be determined only on the completion of the assessment of 147. That assessment of 147 that will get completed after the search is over. So unless that assessment of 147 is completed and the liability is determined, you cannot use the seized asset against the voluntary disclosure of the liability on the part of the assessee. And therefore, the AO rejecting the application, is it valid? Answer is yes. AO rejecting the application, is it valid, students? Answer is yes. Now let's look upon to this particular question, students. All of you. So students, in this context, as you can see very clearly, the information is through that, for Mr. Hari, the information is through that risk management strategy which is formulated by the CBDT. That is the information, and the income escaping assessment for these years in aggregate is how much? 42 lakhs. Now students, you all are aware in this context that if it is a normal case, 3 years, up to 3 years, we have seen that the notice can be issued. Beyond 3 years, if we have to issue the notice, up to 10 years, then in that case, the aggregate of the income which is which has escaped the chargeability to tax, that aggregate of the income, primarily represented in the form of the asset or the entries or the expenditure in the marriages and the events, should be 50 lakhs or above. Should be 50 lakhs or above. And therefore now in this case, if you see here, students, they are targeting which year in this context? AY 1920, 9, AY 1819, 1920, 2021 and 2122. So therefore students, in this context, in this particular context, the April 2021, the notice has been given. So April 2021, the notice has been given. So in that case, the previous year, the notice that you are giving it is previous year 21-22. So the last 3 years, students, would be the previous year 2021. This is say 1 year. Previous year 1920. This is say 2 years. And previous year 1819. This is 3 years. Now what are the relevant AY? AY 21-22. AY 2021. And AY 1920. And AY 1920. And AY 1920. So AY 1920, AY 2021 and AY 21-22. These are the 3 AY students which has been there in this context. And accordingly students, with this 3 AYs which has been there, only can be done. Relevant previous year I have already have compared because notice was given in previous year 21-22. So the last 3 previous year would be this 3 previous year. What are the corresponding AY for that? We have determined. So what about for AY 1819? Is AY 1819 falling in the bracket? No, it is going beyond 3 years. And is your aggregate students, is your aggregate primarily, is it exceeding, in this case, is it exceeding or touching 50 lakhs or above? Answer is no. It is not touching 50 lakhs or above, and hence no notice can be given for that particular period. Okay, so that is the point. So therefore cannot be given. So that is the thing which has been given. So only for these 3 AYs. What about for Mr. Rajesh? Students, for Mr. Rajesh, what we can say? For Mr. Rajesh, who is a search was initiated on him under April 2022 in this case. So which are the assessment year for which the notice can be given? So students, for Rajesh, students, in this case, it can up 3 years, any case, there is a deemed information. There is a deemed information. So for 3 years, any case it can be given, primarily which has been there. 3 years can, any case would be captured. For beyond 3 years, if you have to go, then 3 years up to 10 years, students, 3 years up to 10 years, what we have to see, if it is touching 50 lakhs or above, only then he can go. Okay. Now, one more question which is there in this regard, is it necessary that they are provided the opportunity of being heard before the issue of notice? So for Rajesh, students, in this case 148A is not required, but for Mr. Hari, whether 148A is it required, and the answer is yes. And the answer is yes. So I hope that all of you are clear with this one in this context. If that be the case, students, let's move across further to question number 25 now. Question number 25, students. In this context, Messrs. TMP LLP filed its return of income for AY 23-24, declaring total income of 18 lakhs on 2nd December 2023. On processing of return, the total income determined under section 143(1)(a) was 22 lakhs after disallowing the claim for deduction under 10AA on account of late furnishing of return of income. Thereafter, on scrutiny, the AO made some addition under 40IA and 43B and pass an assessment order under section 143 assessing the total income at 35 lakhs. Later on, the AO noticed some information is flagged for AY 23-24 suggesting that certain income chargeable to tax had escaped the assessment. Based on the said information, notice under 148 was issued by making the reassessment under section 147 after compliance with the requirements stipulated under Section 148A. The total income reassessed under Section 147 was rupees 42 lakhs. The total income reassessed under Section 147 was rupees how much? 42 lakhs. In that particular case, so if you see over here, students, 143.1, how much was that? 22 lakhs. Then after, students, 143, how much it became? 35 lakhs. Thereafter, students, 147, how much it became? In this case, it became, in this context, 42 lakhs. 42 lakhs. So for the purpose of answering this question alone, assume that the intimation under 143.1A was sent on 1st of February 2022. Only for this information, students. So then what is your take? So here, students, what is the time limit in this particular case? Which is there so far as 143.1 is concerned. The intimation. For the intimation particular part, students, what therefore is the time limit which you can all suggest in this particular regard? Indeed, students, the notice has to be given, the intimation under 143.1 has to be given within 9 months. Now it is 9 months. 9 months from the end of the financial year in which the return has been filed. So return has been filed in previous year 23-24, AY 23-24, no? So which is December 2023. So by the end of this, do plus 9 months, students. In this context, in this particular case, do 9 months, students, in this context. So whether in this scenario, if you all will say in this context, whether in this particular scenario, students, if you say in this particular context, whether the intimation, yes, first option is since, yes, since it was sent within 1 year, 1 year is not the period. No, since it was sent after the expiry of 9 months from the end of the financial year. So if it is there, this is 31st of December 2024. 31st of December 2024. And no, since it was sent after the expiry of 1 year. I think there is something which is mistake in the year, which is there in this case. No, there's some correction because he has sending the intimation on 1st of February 2024, which is in the previous year 23-24 itself, which he can definitely do it. That is the maximum time limit So the maximum time limit is 31st of December 2024. And no question is tallying with this. No question, students, is tallying with this, isn't it? So I think, students, please make this as 1st of 2025. 1st February 2025. Please make this 1st February 2025. Otherwise, no particular information is going to get tallied. 1st February 2025. And if it is 1st February 2025, then yes, we can say point number B. Point number B. I hope that all of you are clear with this for now. Every one of you. So this is what it is. Come to the second question, students. For the purpose of answering this question alone, assume that TM LLP certain other income which has escaped. It is given AY 2024, which means that the return is filed in AY 23-24. And from that period, end of 9 months. From that period, end of 9 months, which is 31st December 2024, you can give the intimation. So obvious, and here the intimation is given on February 2024 itself. Which as per 143(1) we have said you can give up to December 2024. So obviously it is then valid. But no option in this particular question is matching to the kind of answer. See, point number A, yes, since it is within 1 year from the end of the financial year in which a return was made. This is not the particular answer at first place. So although yes could be right, but not this reason. And therefore some anomaly is there, and that's the reason why a change is required. Instead of doing 1st February 2024, it has to be 1st February 2025. Now let's come back to this particular question number 2. For the purpose of answering this question alone, assume that in case of Mrs. TMP LLP, certain other income which had escaped the assessment and came to the AO's notice subsequently in the course of reassessment proceeding were also assessed or reassessed in the reassessment order made under 147, in respect of which provision under 148A were not complied with. Examine whether the action. So in this case, students, please tell me, what is your take on this particular part? So is it required, students? Is it required? 148A required? No. Compute the amount of penalty to be levied under 270A. Amount of penalty to be levied to 230A of the income tax act at the time of assessment. Students, at the time of assessment, students, in this particular case, now this is a pure calculation, students. This is a pure calculation that we have to deal with it. And therefore, in this context, at the time of assessment under 143, now students, we just have discussed the flow of the entire event. In whenever you do assessment of 143, see, in this case, question that is to be answered over here is whether we are going to compare this 35 lakh, the assessment is 35 lakhs, and therefore how much is the addition from the intimation? How much is the addition from the intimation, students? The addition is 13 lakhs. So my question therefore to all of you is this, that whether the addition that you have to consider, will it be from intimation to the order of assessment? Will it be from the intimation to the order of assessment, or will it be from or will it be from the return of income, which is 18 lakhs, or will it be from return of income till the order of assessment? What is the comparison that we have to see to determine the amount of underreporting? To determine the amount of underreporting, should we compare from the date of should we consider or compare from the total income as per the ROI and the total income as per the order of assessment, or should we compare the total income as per the intimation with the total income as per the order? As per the order. Quickly, students. The two period from the return to the order or from the intimation to the order. Which total income I need to consider? Return total income to the order's total income, or intimation total income to the order total income? Which would be the start point that I need to consider it? The ROI total income, which is 18 lakhs, or the intimation total income, which is of 22 lakhs? Which will be my start point in this case? Students, always understand one thing. There is an increase from 133, 143, 147. Here the total income is 18 lakhs. Here it is 22, 35, and 42 lakhs. And 42 lakhs. The increase that has taken place, students, is it because of underreporting? 18, there is a 4 lakhs of increase that has taken place. Is it because of underreporting, students? And the answer is no. The changes, students, is because of what? You remember, intimation can change the total income as per your ROI. The intimation can change the total income as per your ROI. If what? If there is what, students? If there is apparent mistake. If there is what? Apparent mistake. So only if there is an apparent mistake that this changes can take place. Only if there is an apparent mistake that this changes can take place. And that exactly is the point. Only if there is an apparent mistake that this changes can take place. And then also over here, students, if you see very carefully, from the intimation to this particular assessment, yes, we will say what? This now change from the intimation to the assessment order. This is on account of underreporting of income. So underreporting 1, and from the assessment to reassessment, again the change of the income is underreporting 2. Is underreporting 2. And accordingly, this underreporting is how much, students? 12 lakhs. Underreporting, students, is how much? 12 lakhs. So now what you have to do, calculate the tax on this 12 lakh rupees, students. It is a partnership from LLP. So calculate tax till HEC. So tax till HEC. So in this case, in this particular case, students, it would be 30% of 12 lakhs, whatever is the amount, plus 4% of HEC, students. That will be the total amount you will know in this context. So 30% of 12 lakhs, which is Quickly tell me the amount of total tax. Total tax is 4,05,600. Okay. Total tax students is 4,05,600. Now they are saying that this is not on account of misreporting. Now penalty of 270A. If it is not on account of misreporting, then the penalty would be 50%. Yeah, sorry. This is 13 lakhs. 13 lakh students. Tax on 13 lakhs. So if the penalty is not on account of misreporting, then the penalty would be 50% of the total tax amount. Whereas if it is on account of misreporting, then it is 200% of the total tax amount. So here students will take 50% of this amount in this case. So 50% would be, students, in this context, 50% would be how much? 202,600. Students, 202,600. 202,800, sorry. So 202,800 students is the answer. Compute the amount of penalty to be levied under 270A at the time of reassessment of 147. Assume underreporting of income is on account of misreporting. So therefore you will compare what with what? 35 with 42 lakhs. 35 with 42 lakhs students. And therefore it is a 7 lakhs case in this regard. 7 lakh students. So now with 7 lakhs that you can see over here, with 7 lakh students that you can see over here, you will be having what students? Again, with 7 lakhs, please tell me, here the tax would be 30% plus HEC. Can you give me the answer? Total tax amount over here. 2,08,400, and because it is on account of misreporting, therefore 200%. Because it is on account of misreporting, therefore 200%, and hence the answer is 436,800. And hence the answer is 436,800. Now in continuation of question number 4, assume reassessment order made under 147 was received on 12th of December 2024 and Mrs. TMP LLP does not prefer an appeal against such order. Can Mrs. TMP LLP make application for grant of immunity from penalty? If yes, what is the time limit for making the said application? By the way, students, question number 4 is of misreporting case. Question number 4, students, is of misreporting case. Do you all agree? And because the question number 4, students, is of misreporting case, therefore in this regard, because question number 4, students, is of misreporting case, therefore students, in this regard, what we will say, indeed, because of this particular reason, students, our proposition that will be there for this particular part, our proposition that will be there for this particular part will be what? Please tell me in this context. Indeed the case, students. Indeed the case. We will say that because there is a misreporting, the immunity from penalty is not available. If this would not have been a misreporting case, then on the order of assessment passed. Thereafter, students, thereafter, if the assessee is not preferring an appeal, if the assessee is not preferring an appeal and the assessee has paid the tax as well as the interest applicable thereon, the assessee has paid the tax as well as the interest applicable thereon, in that particular case, students, in that particular case only, that the immunity is available. So the immunity is available, students, only when the reporting, the immunity from the penalty is available only when you have the 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 case is not of misreporting. But because the case is that of misreporting, therefore you can never get the immunity from the penalty, even if you have not filed any appeal against that order. So that is the point, students, over here in this context. Students, now in this case, question number 26. The only questions are 27, 28. So students, what we will do now, we can just take a break and then we will resume in the evening. Students, the balance I will do it in the evening. Evening timing, students, over here then. In this context, the balance, students, we will be doing at 9 p.m. 9 p.m. students. So we'll be doing it, the balance particular part, at 9 p.m. in this context. Is that fine for all of you? 9 p.m. now. I'll share the link in all your groups. 9 p.m. we will wrap up the balance particular portion. Fine.